Hi everybody. In this video, I have set up a chart already, the Great Britain pound Japanese yen, which it doesn't matter what it is. It's a 2 hour chart, and I set up my lines already because I want to show you all what it looks like in real time for a break to happen and how we would follow that. So looking at this here, we can see I'm zoomed in right now. So if I zoom out, like I can zoom out quite a bit, but I'm not going to right now. I'm just going to zoom out about that far for now. As you can see, I made a trend line coming here. So you have a one bounce down here. The second bounce is right here. So we're waiting for a third bounce off of this line. If it bounces a third time off this line, afterwards when it breaks, then it should go down. May not. Sometimes it doesn't do it, but most of the time it does. So 2 hour chart means every bar is 2 hours. So 2 hours just went by, 2 hours just went by, another 2 hours, and another 2 hours, that type of thing. But as you can see, we're getting a third bounce off of that. So there's our third bounce. We have one, two, three bounces. That's a good sign. So now when we see these three bounces, we know there's three bounces on here. This is a confirmed trend line. Let's see what happens. But I just realized that there's something happening here as well, which is important because when the price starts to make a wedge formation, we all seen what can happen when that happens. So moving along, you can see the break. Now, a break is not a break until the bar closes past the break. So right here, you can see it broke through the line, but the price closed up here. So that was not a break. And you'll see that often, like here you'll see the price, it may, even these colors, red and blue, may go below it a little bit, but unless it does that and the bar's done, remember on this 2 hour chart, because this is the past, this bar is now closed. So we should be seeing, in essence, the next bar if this was live. So that's a break. And that's an even more confirmed break because now 2 hours later, once that bar closed, the price was still below the break. A lot of times the price will break through the line, come back up to test the line, and then shoot down. So you're going to watch for that as well. And that's a real confirmed break there. And there it goes. So 2 days later, after the break, within 2 days, we've had, what is this? Um, about 160 pips so far in 2 days. That's impressive. But as this is being done, right away we start putting a trend line with the two tops. Remember in the last video I showed you start from the first top. I'm not starting from here because it's straight. That actually is a line for future. We could put it there, but I didn't want to confuse things. So I'm just going to delete that. So from this top to the next top, so we can be somewhat certain that there will be some kind of resistance around that area. But that's in no way a confirmed trend line. And why is it not a confirmed trend line? Because we want three bounces. I don't even know you can consider this two. I think this is just one bounce here, possibly. And you can see the price just continues to go down. There it goes. Oh, touched it. There's our second bounce. Two bounces. Now we're interested. Now we're looking at it. We're all talking about it. We're deciding what's going to happen. Time goes by. Like I said, you have to be patient. Maybe a week and a half nearly has gone by. And in all this time, it's still continuing to go down. Days and days pass. You can see where the patience is going to have to come in. See, once this is happening like this, if we're in on the down, we're in on the down. We could still be in on the down this whole time. Probably might have got knocked out right here. But we don't care about the up until it comes close to this. So you can see it takes a little time to get there. So every once in a while, maybe every second day or so, we would look at it. Right now, we would see, okay, it's nowhere near that line break, and so we don't have to pay too much attention to this chart. But as time goes by and things happen and it starts to go towards it, now we would be saying, okay, it's going up towards that line. Let's see if it makes its third bounce. And we would want to eye that for sure. If we could get a third bounce off this line, it would make a really good point for a break. And there it is. So now, right now, we see three bounces. It's still close to the line. A new line is always forming once it starts going up like that. So that's why that next line is there. So we would probably put our order right here, maybe right above, one box above this line. And we would have to adjust it too. So like you see how that line starts to go down, starts to go down. So at this point in time, our buy order would have to be moved down. So we have to continuously move it down, maybe by the day. Every day, just move it down a bit or up a bit, depending, probably down because it's always moving down. So every day you'd have to move it down slightly, 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 to because if you left it here, now you would get in over here. So you don't want that. You want to be in over here. So you have to continuously move your contract down, which is not really that bad. I mean, it could be worse for all the money that it's going to give us. It's a small price to pay. Now, there it is. The price ended on the top of the line. It closed. The next bar confirms it completely. That is a complete break. And right now, it comes down and goes towards the line again. And now it just shoots up. So this is a great opportunity for one to buy some contracts in. Like right now would be a good time to get in on the up. Because as you can see, continuously goes. Now, if you're in on the up, you could make your stop loss tight. Your stop loss could go here, then here, then here, then here, here. And this is a good example as well of what they were saying in the free book that we were reading. Higher highs and higher lows determines uptrend. So if you look, this is a high, this is a low. It's right here, it's right here. The next high is higher than that high. The next low is higher than that low. Then the next high is higher than that one, the next high is higher than that one, and the next is higher than that one. And the lows, that one's higher than that one is higher than that one, and this one is higher than that one. So it continues like that, and then you could know, oh, look at that. Is that a trend change? Maybe a short-term trend change because the long term is right here. So we probably would have been out at this point from that break because we don't want to ride that down. There's just no point in that. But we're not going to get in on the down because this is definitely an uptrend. Our strategy should be at this point to buy on the up when it gets close to this line. And then it might be a good idea to buy on the up. But remember, if it breaks this line, it's going to shoot down. So your stop loss will be close. That's the great thing about a stop loss. A stop loss is real. It's a real thing. It's something that you do when you trade. And when you make a real trade, you put a spot on the chart that you say, if the price goes to this, if the price hits this number, then I want my contracts closed. And automatically, you don't have to be watching it. You could be sleeping, you could be working, it doesn't matter. Automatically, it's guaranteed it's going to stop. So you can guarantee the amount of money you want to invest in any one trade. And that's important. Also, limit orders is the other way around. So let's say it broke on the down and you expected it to go here. Then you put your limit order here. So you say, if the price reaches this number, then I want to close all my contracts. And when you close all your contracts, you have a fair amount of profit from that. So that's a real thing. It's in real trades. It's not just for paper trading. There we go. Nice. Just how we like it. So again, price is moving up, loves to go. This is the low, this is the higher highs. higher lows. We're still on the up. So now it's making an upline there. You notice how these two main trend lines are getting closer and closer together, and they're making a sort of a wedge formation. We love to see that. That usually means big moves. So that line has been tested 3 times for sure now. And this is where the price is right now. Interesting. Now, zooming out, you can see what we've done. We had a trend line here. We had a wedge form. When the wedge form broke, it continued to go down, making a new resistance line. When the resistance line, see, 1, 2, confirmed, 3, and then the break. And it never went down after that. If you were in right now, it would be pure profits. That would be a month and a half, almost 2 months in a trade, going from 179 to 189, and that would be 1,000 pips. That's pretty damn good. Very good. Anyways, hope everybody understands this. Oh, one last thing. I'm just going to remove all lines back to my normal chart. Hope you all understood this, and if you have any questions, let me know.